Hello, I'm Certified Financial Planner Chris Cooper. Many of you might have an interest in what are known as initial public offerings, or IPOs. The biggest one we just heard recently was Facebook, which came out at $38 a share and of course has now dwindled somewhat. So people start to wonder, gee, should I buy a stock when it first comes on the market? Well, many stocks have always had these interesting stories like that. We go back into the 1960s and we look at a company called McDonald's, where if you had bought $2,000 worth of stock then, today you'd have something over several $1,000,000 today of your net worth just for the few hundred shares you might have bought back in the 1960s. So some stocks will have great appreciation potential. Other companies, though, for example, may only be going public so that the liquidity can occur for the owners of the company. This often happens in smaller companies, which you see in the NASDAQ, where owners have been partners of a company and then they take the company public so that then these older partners can then sell their shares and liquidate their holdings in the company and allow others to become majority shareholders. Well, in the case of the IPO for Facebook, Facebook is hard to tell right now what it was trying to do. One is that Zuckerberg himself still continues to own about 29% of the company, and so he's still the largest shareholder of the company. But it also got to award his employees and the people that helped him build that company to what it is today. So these are all good things. But one of the problems, though, is when initial public offerings come out, oftentimes they're very hot. That is, everybody wants to jump in, tends to push prices up fast. Then all of a sudden, reality sets in and it's like, okay, now we start seeing them sell off. Well, in this case here with Facebook, we're not sure whether or not it actually was priced right to begin with, or if the earnings pictures were just a little too rosy for it. And that's the part where history is going to tell us whether or not this was a good idea to come out at this price level, because it should have come out at a lower price. Then it would have had more potential for going up right now, instead of us going down and starting having a lot of criticism of Wall Street bankers and other things like that. But initial public offerings, many times for retail investors, aren't available to them because the institutional investors and the large rich investors have already bought up all the shares before they even come on the marketplace. So basically, ordinary folks like you and me, we get to buy the shares in the used market, essentially like a used car market. We buy them in the secondary market on the stock exchange.